Good morning. Good morning. It is Thursday, John. We're almost there. The longest week of history, but we are here and we're almost there. I hope you're all having a fantastic day. If you are, give us a wave. If you're not, still give us a wave. Tell us where you're tuning in from. Welcome to Market Wake Up, the one-stop shop to get up to date with everything that you need to know. John, today I have got a little bit of a skip in my step, if you can't tell.
Ooh.
And it's because today, we're going long Aussie dollar, and I've got the evidence to prove it. So let's get in to Market Wake Up. That's right.
Very much interested in this analysis then, considering I've been short for so long.
Yeah, but it's time to change, John. It's time. Now, I know you didn't know that I was going to say that because about 2 hours ago, neither did I. See, this is the beauty of macro analysis, is I was diving deep into a reason why we should be shorting it. And in doing so, I found a very strong reason and why we should be buying it, which is just good to know. So I've completely flipped and I've gone, wow, okay, this might actually be a play. This is something I want to share with the Market Wake Up crew. So no, I'm looking forward to it. But other than that, happy Thursday morning. How you doing?
I'm doing really well. It's nice to see some of, when you've had some analysis for a while and it's not been necessarily playing out or turning out, and then it starts to turn around in your favor, and you're like, okay, now it's starting to
shorten stocks.
I haven't. Well, that was something to look into, wasn't it? I mean, I was looking at the overnight situation with the Japanese yen as well, and obviously they've held interest rates, but Ueda has not taken rate hikes off the table, which
it would be silly to do so. If you can tell everyone, hey, we're not going to cut, you're going to see the Japanese yen just absolutely flop.
Yeah, exactly. So it's interesting to, it's kind of reaffirming some kind of ideas that we've had, right, about the Japanese yen and the fact that we don't necessarily think this strength in the yen has gone away completely, but we do feel like it could be at a point where it was just kind of pulling back, and and we still, I still like the idea of being a buyer of the Japanese yen, but it's just not been the right time to do so. So when you start to see central bank talk kind of go in line with what your theory is as well, then you can kind of put a bit more weight behind a potential move. So yeah, Japanese yen, interesting one overnight. It's up across all currencies across the board, really, some more than others, but I quite like. I've got a potential idea on dollar yen that I might discuss as a take it to go.
He's getting excited. How long has it been since we both walked into here excited about a move? The past couple of weeks has been quite flat, and we're both walking in going, I've got something.
Finally.
Something's come across my desk. I feel like Jordan Belfort. Something just come across my desk, John. You're gonna want this. You're gonna want this. I'm looking forward to it. Look, let's have a chat about what has happened overnight. You mentioned there, obviously, the yen holding, Bank of Japan holding interest rates, and the yen finding a bit of strength from that. The stocks across the board are down, and commodities even taken a little bit of a hit as well. There has been a couple of interesting things to note. Obviously, US advanced GDP fell short of expectations, which is it's so hard to get a read on the big picture at the moment. Like, data is like this; it's wicking everywhere, and it's really hard to find that median spot with where people really want to be. I haven't really read too much into the Japanese yen results from today, but I was having a look into that GDP. I did do some diving into the RBA. Now, it doesn't relate necessarily to my big buy, but obviously with CPI coming in flat, analysts didn't even care. You know how hard it was to find a meaty piece of journalism that actually made sense and was worth the read. Like, I was reading through people's reports on this CPI, and I was just like, what are you writing? Like, you are paid to write, and that is all. And I can just tell, because like, you're not actually saying anything. And when that's happening, you know that the media, like, it just doesn't matter.
It's because it's all to do with China, isn't it? All the focus is on China and what's going on in China.
Wow.
In my opinion.
Yeah. Well, no, I agree, and I've got some good news. But that's the big bite territory. That's big bite territory. Stop. You're winding me up.
Sorry. I'm just so excited.
No. But in terms of overnight, I don't think really there's anything that's grabbed my attention or been an area of concern. Geopolitically, a normal night, I'd say, which is crazy to say, but no big uproars, no big surprises.
No, and I think that's the tale of the tape. Really, there was some data, sort of retail sales out of Australia. That coming a lot lower than expected. It was at previously 0.7 down to 0.1, so that didn't really help, I guess, in the grand scheme of things for the Australian dollar at the moment. China manufacturing PMIs actually came in above 50. Which, again, I'm probably getting into big bite territory, so I'm going to walk away from that quite quickly. But other than that, the narrative really has shifted a little bit into the BOJ and kind of what's coming up on the cards today. Very interesting, actually, what's coming up today. So I'll let you roll into your prices, I think, because I think this is going to be quite an important one today. Although, is it? This is the thing. It's because of the election so close, the market can kind of ignore sort of what we would class as big red folder data. Because
I don't think they can ignore PCE.
No, and I don't think they can ignore NFP tomorrow either. I don't think they can, and I think the market will react to those. But it's how much reaction will we get? Will we see the reactions that we typically see, or will we see bigger moves maybe because volatility is not, or volumes aren't really there at the moment to warrant sort of smaller moves, and when there's less volume in the market, it can be pushed quite aggressively. So I'm kind of in a place where I'm sitting on the fence a little with what I'm doing at the moment. I haven't actually been involved with anything this week. I've not traded nothing because I've been waiting for a few ideas to not trading nothing. And I've been kind of waiting on a few ideas to come to fruition, and they're just starting to kind of do that right now. I've been looking at obviously getting involved with Platinum. Platinum is just about to start. Well, yesterday it had a good sort of rollover day. I'm looking to see if that kind of follows through and continues today. If I just quickly share my chart with you here, just so I can show you what I'm looking at. This was we've got a commitment to trade, a report signal on Platinum at the moment, and we kind of discussed last week that prices could rise until we saw kind of an area where the market really wants to take the move. So yesterday we had a very strong move to the downside. That move was 4.26% down on the day, which was quite significant. We've had days like that in the past, more towards obviously geared towards the bearish side as well. And now that we're kind of breaking back below key areas, which I feel were key areas of support, starting to get very interested in this now. So kind of looking at how I can potentially trade this going forward. I'm going to wait just for a couple more technical setups or technical indicators to agree with my conditions, and then I'll look to potentially go into this one either tomorrow or next week. So still kind of waiting on things like that at the minute. So I haven't traded much really. I haven't traded anything at all. So I've been very much sitting there. I was gonna say sometimes trading is just like fishing, right? You're just sitting there, you're just waiting until you get the bite.
I realised that the big bite, but I realised that that I suit this type of trading because I got a pair of golf clubs behind me, and someone from work questioned me and he goes, "Oh, you play golf?" And he's like, "Oh, it's too boring for me. I know Rich hates golf." And I'm like, "No, it's great." I'm like, "It's really nice, like great sport. It's chill. It's patience testing. It's tough. It's hard. Like it's very similar to trading. Very similar to trading." I also really enjoy fishing. I also really enjoy fishing. Very patient, right? Very tough. Sometimes you go a long time without any reward. And I've just realized that is exactly how I trade.
Yeah. Yeah, and sometimes that's the best way. Obviously, it depends what your goals are and what you want to try and achieve with this. Because if you're trying to get some income out of this that is like a daily income, then you're going to have to be in the markets a lot. But I prefer this type of trading because I think it eases the mind a little bit.
A daily income's very hard to strive for, right? Yeah. Having that, there's days you're not going to earn and you're going to feel like you've done it wrong, even though you probably did do everything right and all that stuff. The longer term stuff is a little bit more grueling because it's patience testing. And if you're running out of your bankroll, your pressure gets on when you get towards the end of that bankroll. Yeah. But the way I've always done it is like, because when it's longer term, it's bigger wins. I just divide that bigger win into a wage. Right, so that bigger win, if I took it out, like I wouldn't give myself all that and go buy a new car with it. Like that'll be my next 6 months of wages. So I've got 6 months to get another good win, right? Yeah. And keep bankrolling. And if you can't do that from the get-go, back yourself up with another job or something. Beauty in macro trading is you don't need to be here all day, every day. You can go do something else, and it doesn't change that quick. We struggle to bring you analysis every day, right? Because macro doesn't change all that quick. But when you nail it, there's no better feel.
No, yeah, absolutely. It's like when you hit a beautiful shot into the green and it's 5 feet away. It's that's what pulls you back.
Yeah. Well, I mean, yeah. Now we're talking. Marina, good morning. Hello. It's good to see you. Welcome back. I hope you're having a fantastic day. John, I'm going to quiz you on it. You know what I'm going to quiz you on because I reckon you've already had a look. I reckon you've cheated. Where are we at?
Wow. To your surprise, Jordan, I haven't. But I have looked at the S&P 500 today and I have seen it's down. So I know that the VIX is going to be up.
Yeah. Okay.
Where the VIX is, I don't know. But
when we discussed yesterday,
we were at 19 something yesterday.
19.8 or 19.7 because you were 7.4. It was 19.74 because you guessed 19.7.
Well, I know that the S&P's fallen quite a bit. So I'm going to say 20. Whoa, I don't remember if I go 20.9 or 21 just to even it out. 20. I'm going to say 20.9.
21.7.
Oh, blimey! Oh, that's jumped a bit. I have not looked at that. That's actually jumped a bit. That's big. It's jumped there, which is nice to see because we've been saying that this is what we want to see, right? This is nice to see.
Jumped a little bit, which is very, very interesting to see. But there you go.
Okay, I like it. Well, it kind of goes into what we were talking about before the event, and yesterday I was kind of disappointed by, or yesterday morning at least, I was very much disappointed by the lack of volatility being shown within the.
What are we? 5 days out.
5 days out. Yeah, and it's there's got to be some kind of volatility run, right? I just can't see that it could be without some kind of volatility, especially because it's so close. It's still so close. They've done a lot of voting in America already, right? Because you can get the early votes in, but the majority of the early voters are people that are age 60 and above. I think it was when I was looking at some of the data. And they tend to favor more on the Republican side, I believe.
If I've been looking at Kamala Harris's campaign, I'd say that's accurate because some of the stuff she's saying and running around. I was watching this quote the other day. She's saying, "We need to be more woke. We need more wokeness. Like someone needs to be the wokest. Let's become the woke." And I was just like, "This is the presidential candidate of the United States."
Yeah,
quietly.
I know, and it's quite mental, really, isn't it? How it's all kind of playing out at the minute, but it's still so close. And I think I was looking at Sky News, and Sky News they had this really cool interactive map that they were using, and they were kind of going like if buts and maybes with it, and kind of the key states and changing the key states. And they were saying like as it kind of stands at the moment, Kamala Harris could win by just 2 votes. That is insane. That is absolutely insane.
2 states or 2 votes?
2 electoral votes, that's very close. Very, very, very close. So this is why this is such a coin flip, and this is why I feel like volatility should be higher. But it should be higher. Yeah.
No, I think that's why it's not. Is because
well, I guess
where's the volatility going to be?
Yeah,
like, are you back? True. Are you picking a side? Like, so the reason I think volatility and volume's down is because no one can pick a side. Everyone's like, it's too risky to try and pick a side. Now, the volatile event is the election.
Yeah.
When those polls start coming in, even before it's called, if there's a favorite, you're going to see assets move. You are going to, because people have been sitting on their hands for the past, 4 weeks, some people 5-6 months because they can't call it, since Joe Biden was taken out of the race. And now it's just like, I mean, we're not, right? We're both sitting there going, there's no way I'm picking a side.
Yeah, absolutely.
I got no idea.
Absolutely. You're right. Maybe that is the reason why volumes are so low. And you can see that when you pop your volume chart on the S&P 500, for instance, you can see the volumes just tapering off. And it's going to be interesting, though, to see if we do start to break higher. I mean, if I was looking at this type of technical pattern on any other chart, I'd say this is favourable, more of a bit of a bullish breakout. So I'm interested to see if we do see that spike in volatility, because that's where I feel like my trade's going to be. Is going to be that rebound of volatility. So I'm looking for the VIX to spike higher, and then I'm looking for it to recover over the next sort of month or so, and I'm going to try and play that a little bit. So it'll be interesting to see if that does play out, for one, but two, if we do get any kind of big spikes, I'm very much there for that. So
I like it. Right, let me get you through everything that's happened today. We've mentioned there's a bit of volatility today. As you can see on the VIX here, we are up. We've gapped up a little bit, sitting in around 21.68 now. We're sitting at. So Aussie dollar unchanged, euro unchanged. The pound up 0.15%. The US dollar CAD relatively unchanged. Currency is not doing too much. US dollar Japanese yen, though, down 0.7%. Japanese yen finding a bit of strength. Now, if we have a look at indices, that's where things get interesting. The XJO, or the Oz 200, is down 0.4%. The DAX is down 0.4%. The Nikkei is down 1.7%. The FTSE is down 0.6%. And the S&P 500 is down 0.6% in pre-market. All right, so that is something to be wary of.
Yeah.
Coffee up 0.5%, gold down 0.3%, nat gas up 0.4%, silver down 0.6%, sugar down 0.2%, and oil down 0.75%. Risk on assets. Don't understand the correlation between the S&P and gold right now. It just doesn't add up to me, right? The way that's kind of working, but it does look like those riskier assets are coming down.
Yeah, well, it's funny you say that. I was doing some analysis on that, because I don't think I've really ever done analysis on the S&P and gold, funnily enough, like together. I've always just kind of assumed that if the S&P was falling, gold prices might move higher, blah, blah, blah. They're actually very correlated. When you look at when the S&P 500 in the past has fallen aggressively, gold also follows suit. And that could be, from my standpoint anyway, the way I kind of interpret that is that people are moving away and they want to go more cash maybe. So they are taking themselves out of stock markets, but they also are kind of cashing in on gold, right, to make up for the losses maybe in the S&P 500. So they're kind of essentially taking a bit of profit out, and keeping that as cash maybe to reinvest at another point. So when you actually put the two charts side by side and you look at the big events, you can see them kind of following a very similar path.
Interesting. Because in theory, that shouldn't happen.
No, right?
Theory, no,
but then if you look at sort of when does gold usually go through sort of rallies and stuff, it's because people have more money to invest, right? So, and then that kind of brings down the natural sort of, or kind of brings into the question the natural supply and demand. If people have more money, then gold's going to be in demand more because people are looking to invest into something.
Are you ready?
Yes.
Are you ready for the big bite?
I am.
Are you ready to talk China?
I'm
ready to talk the Aussie dollar?
I'm ready to talk the Aussie dollar. I can't believe you're going to tell me we're going long, but I'm ready.
Are you currently short the Aussie dollar?
Not physically, mentally, yes.
All right, let's get in to the big bite. Okay. The main thing we're looking at today is the Chinese Purchasing Managers Index, the manufacturing PMI that come out. Now, China has two. Okay, you got the Caixin manufacturing PMI, and then you've got the MBS manufacturing PMI. The MBS manufacturing PMI is the survey of 3,000 manufacturers on business conditions. The Caixin is the actual report. However, the MBS one carries more strength. They correlate incredibly similar. The NBS one is more of a leading indicator. So the Caixin manufacturing PMI does tend to follow the MBS. Today, I know that was a lot. Today, we're talking MBS because that's what came out today. The Manufacturing Purchasing Managers Index, which did go positive for the first time in a little while, right? This chart, because TradingView just absolutely loves to be a pain with us, doesn't show the last 3 months of data. It doesn't. So I'm going to go ahead and fill it in for you just so everyone's aware of where we were at and where we are now. There should be a little price mark here. Sorry, I've completely lost my little... There it is. Price note. We came in at 50.4 today, and it is October.
It is October, the end of October.
I'm very far away. Give me a second. We came in at 50.4. This chart is not doing what it's supposed to be doing. There we go. That's better.
Yeah, that's better.
Sorry. 50.1 we came in at, okay? Which means we're now in positive territory. This is the first time we've been in positive or market expansion territory since April this year. This says 50.2. Let me go ahead and fix it for you. It's 50.1. Now, as we know, China's data hasn't been the sexiest, and it's the main reason John's been shorting the Aussie dollar, with fair reason. This may change things because, John, I'm going to click this little button here, which is going to show you the seasonality of the manufacturing PMI in China. And it's going to show you that November since 2015 is an 89% hit rate of showing growth. Now, that growth is an average of 0.3 on the manufacturing PMI index, okay? December then follows it with a 67% chance. Not as high, but still pretty good, with an average climb of about 0.1, which means if we're to use seasonality when it comes to manufacturing PMI, we can expect in and around 0.4% growth over the next 2 months, which would put us well and truly into the positive at 50.5. Which is, I say well and truly into the positive. If you have a look at the manufacturing PMI in China, we very much stay around that 50. You know, the highest we've been in a very long time is 54. And that was like, wow, this is incredible. I know right now Germany's at 40. That is a massive outlier. That's a big, big, big problem. China's showing a little bit of growth. And I thought this is really interesting considering seasonally, we do actually show a little bit of growth in the manufacturing PMI towards the end of the year. And I was like, I wonder if this is going to be the beginning of something. So I started to dig in. I started to have some fun. And what I did is I chucked on the AXY chart, which is the Australian Currency Index. And I went ahead and I'm going to move this to a new pane above. So they're going to be separate windows. Okay. What I started to do is I got my little highlighter tool here on TradingView. And I was highlighting when we got above and below what kind of happened. And I correlated that with what was happening in the Aussie dollar. Now we can't because I need to flip this around. So bear with me. I'm going to go over here. I'm going to pull up the AXY chart. And then we're going to add the Chinese manufacturing, which is CNM PMI. We're getting deep in here. We're getting deep into the charts. Bear with me. Okay. And the reason I'm doing this is because it's just going to allow me to filter down into daily charts on the Aussie dollar. So it's going to allow me to see it a little bit better. So now you can see I can go up here and I can get on the daily chart. I can even go ahead and switch this to candlesticks and we can zoom out a little bit more and we can see it a little bit prettier. Whereas if I was just on the Chinese, it will only allow me to lock in the weekly and we wouldn't see it as clean. What I started to do, John, was to have a look at every time we were above or below the 50, what happened in the Australian dollar? What was the cause effect? Where did we go? Okay. So we've got key areas where obviously we go well above. We've got areas where we really sit in, and we've got areas where we go well below. If we hover above for a little while, hover below for a little while, you can probably already see from naked eye the reaction it has in the Australian dollar. When we're hovering below in the Chinese manufacturing PMI, Australia's biggest trade partner, we sell all our coal and iron to manufacturing facilities in China. That is the biggest moneymaker in Australia. When their manufacturing PMI is negative, the Aussie dollar has a very clear reaction. When it is positive, we do get a little bit more tendency to the upside. When it is positive, I know it's COVID, I know it's kind of hard to read into, but nevertheless, when it is positive, we do see a bit of a correlation. When it goes negative, we do see a bit of a correlation. What we're doing now is we've been sitting around the 50, and chart is kind of suggesting that we're not really going anywhere on the Aussie dollar. If we've just gotten back up above 50 and we're forecasted for the next few months to keep going above 50, if we were to read into seasonal analysis, there might just be an opportunity to long the Aussie dollar. Now, if we look at Aussie US dollar itself, it's going to look a little bit harder. Do we want to buy the Australian dollar right now against the US dollar? I'm not entirely sure.
I mean, you say that, but there's going to be a point where they're going to have to, we're going to see some kind of recovery. It's just kind of when that recovery is going to be, and if we do see this official growth in the manufacturing, right? But I like this chart a lot because you can see the correlations between them is quite strong.
Yep, that's exactly right. And technically, Aussie dollar, US dollar, look where price is right now. I've just drawn that one line. A lot of people will be looking at massively overextended towards the downside here. If we are seeing growth potential, which begun today and already had a little bit of a positive impact, are we starting to see some potential upside in China and therefore in the Aussie dollar short term? Maybe. But then I got even fruitier.
Oh,
I paired it against the Japanese yen.
Wow.
Because John, unlike you, I think weakness is back in the Japanese yen. I think their time in the sun is done. I think they had their fun. They won the lottery. Did you see the way? Look at my chart right here. They won the lottery, and they went and blown it at a casino, and it's come home. And I do genuinely think the Japanese yen is going to continue its weakness that we've seen over the past 2 years, given the recent data. I don't think they're in a position to drive demand for their currency. I don't think they're going to be in the same boat, but I don't think they're going to be in a position to drive demand for their currency, especially against something like the Aussie dollar in the event that Chinese manufacturing PMI follows the 89% seasonal play.
Yeah, I do like, don't get me wrong, I do like the yen sort of weakness. I'm just cautious that if they do start hiking rates, that we're going to see a little bit more strength out of it. And that the problem is with the BOJ, you don't know if they are or not. They're not very clear in their stance. When we look at other central banks, they kind of give us the talk. Yes, we're in a position to cut rates now and blah, blah, blah. BOJ don't really do that. So, like the comments out of Awada today were very much like, yeah, we're not going to take sort of rate hikes off the table, but it's going to come down to the fact that, it depends if wages increase again. If wages increase again, we might hike rates, but that's not going to be the only factor that comes into it. And you just kind of like, well, what are you looking for then? And they're never going to give away that kind of theory, of to what happens. But I like this chart a lot.
So Aussie dollar long because I'm long on the Chinese manufacturing index if we see positive growth. But the fact that we already got 50.1 in a seasonally weak month of October is a positive for me. If we can follow the seasonally strength into the end of the year, plus, John, not that it adds anything, and I know it's not going to do anything for you, but it might for the guys at home. Analysts are forecasting the manufacturing PMI to be at 53 by March next year in China.
How correct are they?
This year, they've been absolutely shocking. That's why I said I wouldn't carry too much weight. But the guy, like, someone might want to. This is why it's just a little cherry on top at the end of my analysis. It's not part of my analysis.
No, I like it.
They do forecast 53 by March. And if that is the case, which is the same time Aussie dollars forecast or the RBA's forecasted to cut rates, there could be a lot going the Australian dollar way.
Yeah, definitely. I mean, the one thing that's quite shocked me actually is because obviously a lot of my reason to short it was because of the hedge fund positioning within the market. And that I was actually quite surprised to see that hasn't actually changed that much this week. Usually when you do see the top come and then we see this big reversal, you can see them like basically getting back in and adding in positions again. Not really seeing it this time. They've actually, shorts are actually still at very high levels, which is quite interesting to see. It makes me think that they're not ready to unload those shorts just yet. And that's why I'm still on the side of being short Aussie dollar right now.
Hang on, are you telling me that the market's mispricing?
Well, we kind of discussed this yesterday in a way, didn't we? Because I think if China does start to show considerable growth and they do start to give the stimulus that everybody's really been hankering for, then I don't see why the Australian dollar can't come back and have a good fight back for the end of the year, potentially into 2025 as well. So it's going to be, I think a lot of it's going to come down to the dollar as well in this situation, and I can see a comment's just come in there. So yes, the dollar. Well, I'll talk about the US dollar tomorrow because there's actually a very interesting short that I like on the dollar right now, but I don't necessarily want to get involved with it. But I just want to show you.
There's your big butt. Your big butt. Aussie dollar potential longs because Chinese PMI is on its way. You got to take it to go, or we're 2 minutes over time. What do you want?
We're very much over time, so I think I'll talk about it in tomorrow. But yeah, it's going to be to do with sort of the COT reports and what the COT reports are showing me again this week. I think there's actually quite an interesting setup on the US dollar right now, but it's going to be interesting to watch to see how this one plays out going into the election. But I just wanted to show you where hedge funds are positioning on the dollar ahead of that.
Yeah, you go. Jaeger gets it. Yes, he gets it. Absolutely. Guys, thank you so much for joining us. We'll be back tomorrow, 8:30 a.m. British Standard Time. If you are subscribed to us, I'm going to ask a favor. You hit the little notification bell on the top corner. YouTube is fighting us at the moment. So that's going to help us a lot. So go out there, hit the little subscribe button. Make sure you got the notification bell turned on. We'll be back tomorrow, same time, to do this all again and to talk US dollar. Guys, take care. John, have a fantastic trading day, and we'll see you soon.